It was too slow to be useful. Couldn't really use it for real applications like AI or blockchain. As a developer, it was too difficult to use. So we solved all of that. FHE today, at least Zama's version of FHE, is 100 times faster than it was when we started the company. It's easy to use as a developer, so you don't have to learn any cryptography. And you can use it for anything from databases to AI to smart contracts. That's why we decided to build our own protocol called the Zama Protocol that enables confidential smart contracts on top of any public blockchain, L1, L2, Solana, EVM, without having to change the actual blockchain itself. So it works exactly the same as if you integrated it natively, but instead of having to run the FHE computation on-chain, it's done by what we call a network of coprocessors who act on behalf of the application that's running on Ethereum, for example.
Welcome to Epicenter, the show which talks about the technologies, projects, and people driving decentralization and the blockchain revolution. I'm Friederike Ernst, and today I'm speaking with Rand Hindi, who is the CEO of Zama. So Zama works on fully homomorphic encryption in the blockchain space. Before we dive into that, let me tell you about our sponsor this week. If you're looking to stake your crypto with confidence, look no further than Chorus One. More than 150,000 delegators, including institutions like BitGo, Pantera Capital, and Ledger, trust Chorus One with their assets. They support over 50 blockchains and are leaders in governance on networks like Cosmos, ensuring your stake is responsibly managed. Thanks to their advanced MEV research, you can also enjoy the highest staking rewards. You can stake directly from your preferred wallet, set up a white label node, restake your assets on EigenLayer or Symbiotic, or use their SDK for multi-chain staking in your app. Learn more at chorus.one and start staking today.
Hey guys, I want to tell you about Gnosis, a collective of builders creating real tools for real people on the open internet. Gnosis has been around since 2015. In fact, it started as one of Ethereum's very first projects. And today it's grown into a whole ecosystem designed to make open finance actually work for everyday people. At the center of it all is Gnosis Chain. It's a low-cost, highly decentralized layer 1 that's compatible with Ethereum and secured by over 300,000 validators. So whether you're building a dApp, experimenting with DeFi, or working on autonomous agents, Gnosis Chain gives you a solid, neutral foundation to build on. But Gnosis is more than just infrastructure. It's also tools that people can actually use. Like Circles, for example, lets anyone issue their own digital currency through networks of trust, not banks. And then there's Metri. It's their smart contract wallet that makes it easy to access Circles, manage group currencies, and even spend anywhere Visa is accepted, thanks to their integration with Gnosis Pay. All this is governed by Gnosis DAO, where anyone can propose, vote, and help guide the network. And if you want to get involved, running a validator is super easy. All you need is one GNO and some basic hardware. To learn more and start building on the open internet, head to gnosis.io. Gnosis, building the open internet one block at a time.
Rand, thank you so much for coming back on.
Thank you for having me again.
So you joined us last in late 2023, so almost 2 years ago. And Zama was mostly known as a fully homomorphic encryption research and tooling company. I hope that's a fair description. How has Zama evolved since then over the last 2 years?
Well, that's a good question. So when we started Zama 5 years ago, we wanted to solve the problems with fully homomorphic encryption, FHE, namely that it was too slow to be useful, that you couldn't really use it for real applications like AI or blockchain, and that as a developer, it was too difficult to use. So we solved all of that. FHE today, at least Zama's version of FHE, is 100 times faster than it was when we started the company. It's easy to use as a developer, so you don't have to learn any cryptography, and you can use it for anything from databases to AI to smart contracts. Our business initially was to sell the technology to other companies who wanted to use FHE in their own products. In particular, companies building confidential blockchain projects. For example, Phoenix, Inco, Shiba are all users of Zama's technology. One thing we realized, though, doing that is there was a number of people who reached out to us wanting to build confidential applications on existing public blockchains like Ethereum, Base, or Solana. And for that, we didn't really have a solution because our technology had to be integrated in a new chain at the protocol level. That's why we decided to build our own protocol called the Zama Protocol that enables confidential smart contracts on top of any public blockchain, L1, L2, Solana, EVM, without having to change the actual blockchain itself. So it works exactly the same as if you integrated it natively, but instead of having to run the FHE computation on chain, it's done by what we call a network of coprocessors who act on behalf of the application that's running on Ethereum, for example. And so now effectively we've shifted our business from selling technology to other infrastructure companies to providing a protocol that any app developer could use to build confidentiality on existing chains.
I think there's a lot to unpack here in terms of architecture. So typically what we see is people starting up new chains, kind of like if the existing chains aren't up to their specifications. So tell us about kind of like building this FHE environment on existing chains and how that works on a technical level.
So the way that FHE works is you take encrypted data and then you have to basically do FHE computation on the encrypted data. This is very expensive compute-wise. The second problem is if you want to have composability between smart contracts, you need to use the same encryption key, so the same public key, to encrypt all of the data amongst the smart contracts, which means you also need a way to do selective decryption without, compromising the security of the whole protocol. So those two problems we solved using a network of FHE and MPC coprocessors that basically monitor what the application wants to do and does it on behalf of the application. So let's say, for example, I want to do a confidential token transfer, right? So I want to send you some money on chain, some stable coins, but I don't want people to know how much money I sent you or how much money you have or I have. So you want to keep the balances encrypted on chain and you want to keep the amounts encrypted on chain. The way you do this with the Zama protocol is you deploy a confidential token contract. So it's just a regular smart contract on Ethereum, for example. And you specify in your contract that the balances are encrypted and that the amounts are encrypted. And you also define the rules for who's allowed to decrypt the balances. So for example, the user should be able to decrypt their own balances, but you could also start building some compliance features such that, enabling your accountant to access your balances or whatever, right? What happens though is that Ethereum itself wouldn't do the FHE computation or the decryption because it doesn't have the capabilities to do so. Instead, when the smart contract says something like, add this encrypted amount to this encrypted balance, it emits an event which is picked up by the Zama coprocessors that basically say, oh, someone is asking me to take those two inputs, encrypted inputs, perform this addition and store the data at this location. So we're effectively decoupling the application logic and the commitment to what's supposed to be done from the actual execution that is happening off-chain in the Zama protocol operators. And by doing that, it means that there is virtually zero slowdown on Ethereum itself because there is no computation happening there, and everything is offloaded to a network of GPU operators.
Tell us about that network of coprocessors and kind of like how I become a part of this and kind of what the security implications are for people who kind of use the confidential blockchain protocol as part of the Ethereum or Solana or whatever stack.
There are two components to a protocol. The first component is the FHE operators. They do the FHE computation. Technically, this can be anyone because the FHE computation is done completely publicly. So there is no private information needed to be an FHE operator. You just take the operation, compute it, and post it to the Zama protocol. Anybody can publicly verify it. So think of it like any blockchain protocol, right? It's a publicly verifiable computation. The part that's more tricky is how do you handle decryption? So the way that we do that is the smart contract can define access control logic in the contract itself. So it can say, if this condition is true, allow this person to decrypt XYZ value in the contract. This also emits an event which is picked up by a different set of operators, which actually run a threshold MPC protocol to decrypt the data according to what the contract allows them to decrypt. So that MPC protocol, has to hold by definition like a secret, right? Like basically the pieces of the secret key that allows you to do the decryption. So you cannot have random people run that, because otherwise, well, how do you know they're not just cheating? So what we did in the Zama protocol is we basically ran an RFQ, right? So a request for operators, where people had to prove that, one, they were able to run infrastructure in a very reliable way, because you don't want people to block the protocol. And secondly, that they already were securing billions in other things. So the people who are going to be running the MPC protocol for Zama are validators with billions at stakes in other protocol, wallet providers that are securing hundreds of billions in assets, infrastructure companies who are responsible for some of the biggest blockchain projects, custodians who are holding assets for institutional customers. So the idea here is that the limited set of people running the MPC protocol, so 13 operators in the case of Zama, together bring $100+ billion of reputation security on top of whatever stake they put in the Zama protocol itself. And that's really important, right? Because in the case of Ethereum, you have 1 million validators. They can be anybody, and it doesn't matter because anybody can be a validator. But for MPC protocols, and that's true of all MPC protocols, you can only have a limited number of people participating. And so you have to make sure that those people are the most trusted, reputable companies in the world. So the logic here is that anybody can run an FHE node eventually. It's just publicly verifiable computation. That's fine. But the number of MPC nodes and operators are going to be limited to very high quality, reputable companies. And if they cheat, arguably they lose more money than they have in Zama, because their whole business would fall down. Like, if a tier 1 custodian cheats in the Zama protocol, they're not going to have many customers left after that, right?
Yeah. Tell us about, so kind of there's 13 of these coprocessors in the MPC round.
I'd like to mention, by the way, that 13 is more than any MPC protocol in production has today. If you look at everybody else doing MPC, they have 3 to 5 nodes. We have 13, which is already way more than anybody has deployed.
And what's the quorum? So kind of how many people actually need to, how many of these entities need to work together in order to kind of decrypt?
So you need technically 9 out of 13 to decrypt. What we are working on now is a way to combine zero-knowledge proofs with the MPC protocol, so that each of the MPC nodes has to provide a zero-knowledge proof that they've done the MPC computation correctly. And if you do that, you can actually have even better security, because you can have what we call verifiable MPC. One thing about MPC is that you trust the majority is honest, but you don't have a way to verify who individually might have cheated, right? So in the case of Zama, as long as 9 out of 13 nodes have run the computation correctly, then the result is correct. But if all 9 of them have cheated, you don't have a way to know it. And so adding zero-knowledge proof to that would be a way to identify individual cheaters in the MPC protocol and slash them and do whatever appropriate thing you have to do on top of that. But this is an active area of research, so it's not like there is no solution to that today.
Just to understand kind of like how much is at stake here. So if 9 out of the 13 collude, and I mean, I understand this is unlikely in the catastrophic failure of the protocol, but what's the worst they can do then?
It depends on the application, right? I mean, obviously, if they collude, they could decrypt and see your money, right? So they could tell how much money you have, which is bad for privacy, but I guess is, financially.
I mean, the question is kind of like, can they kind of divulge secrets, or can they steal money? I think that's kind of like the spectrum we're talking on, right?
It depends on the application, right? So if your application uses a decryption of something to trigger some financial side effect, then obviously forging a fake decryption could lead to triggering the wrong smart contract logic, right? So one example where this happens is, let's say you have a confidential token and you want to, bridge it to a non-confidential token. So you want to go from confidential to non-confidential. Someone has to decrypt the amount that needs to be bridged out of the confidential token, right? If I can produce an arbitrary value, technically I could just, bridge out as much money as I want from the bridge contract. But this is a problem that you have with any kind of protocol where you're relying on some kind of, I would say, a majority assumption. So that's the reason why you need to work with extremely highly reliable operators. So what we're saying here is, yes, sure, there are 13 of them, but those 13 operators are trusted, at the tune of $100+ billion already today. So the stake they bring is huge.
I totally understand that. And I think we have the same thing kind of for multi-sigs that kind of upgrade layer 2s and bridges and so on. So kind of like, I think kind of like, I just, I'm not critiquing the setup per se. I'm just trying to understand what kind of the risk landscape kind of looks like.
Well, see, the thing is that if you think about cryptography, right, there's really only two ways to deal with decryption, right? Or let's say there's only two ways to deal with composability on a shared secret state. One way is have a shared public key, and therefore you need a way to do decryption correctly. So that's what we do at Zama. The other way is to basically have interaction. So people just basically do a bunch of transactions to the protocol, to basically commit their own result. So that's actually a good explanation of the difference between FHE-based and ZK-based privacy protocols. ZK-based privacy protocols don't allow you to have computation and composability on the secret state because you cannot compute on a ZK proof, right? You can only prove you've done something. So if you want composability, you need the different parties involved in the shared computation to basically make a transaction and go back and forth in a protocol. So you're basically doing a bunch of interactions, right? That's okay if the transactions are simple and everybody's online, but if people are offline, it doesn't work, right? You need everybody to be here to do that. The only way to have composability in an offline asynchronous manner is to use confidential computing, FHE, TE, MPC, which by definition means you need to use threshold decryption for the decryption. There's just no other solution. It doesn't exist. Like that's a universal reality of cryptography today is either you have a bunch of interaction, everybody has to be online, or you need to have effectively like a decryption network that takes care of doing decryption for people.
Yeah, fully granted. What's the process of replacing one of those 13 entities? So say I have a reputable validator service kind of like that stakes to the tune of, I don't know, $5 billion, and kind of I sell it, or kind of I get acquired, or I just decide to quit. What happens then? Can I kind of like pass on my part of the MPC pie to someone else, or do I need a new ceremony?
Yeah. We can do what's called resharing, which means that you can securely hand over, or change the MPC set, MPC participant sets. In the Zama protocol, the way that we do this is there are two effectively reasons why you would want to change an operator. Either the operator is no longer available, or maybe they've been too slow, and maybe there's like a better one who can replace them. In which case, it's just a simple kind of handover that we do based on epochs. So every X months or whatever, we haven't really decided this yet. We effectively look at who have been the least performant operators, and we offer people to replace them. However, in order to be an operator, you must have been running a Zama testnet for some time to prove that you've got the DevOps capabilities and that you're not just rich, but you can actually run infrastructure, right? Because this is not just about stake, it's also about capacity to run critical infrastructure. So that's one thing. The second thing is, if an operator gets caught cheated, anybody could basically make a governance proposal asking to either penalize or slash or replace the operator, providing some proof that they cheated. So, for example, if you're monitoring the MPC network and you see, Zama's node has been misbehaving, you just file a governance proposal on the Zama governance DAO, pretty much, saying, I've caught this guy cheating, here's the proof, and this is what I'm suggesting that we do about it, and then people vote on it. The reason why we go with governance-based slashing is because there's so many reasons why an operator could have made a mistake, right? Maybe the data center went down, or maybe, like there was a software bug that they've deployed or something like that. And we want to make sure that we can distinguish between malicious intent and honest mistake. And I think it's not fair to slash the whole stake of someone just because, their data center went down for like an hour, right? And you see that in blockchain in general, by the way, Ethereum aside, which is a unique exception, most protocols have flexible, I would say, slashing policies that take into account the reality of running infrastructure in the real world. So again, in our case, we're trying to be extremely pragmatic. What matters to us is that we offer, a very highly reputable, secure protocol, doing the best that technology today allows us to do.
Cool. Tell us about the incentives for the operators. So, I'm one of those 13 companies that takes part in this MPC pool. What's in it for me?
You get rewarded with Zama tokens. So all of those operators have to stake, and they get rewarded proportionally to their stake. And also, we're thinking about introducing performance-based rewards. So effectively, we look at how quickly each of those nodes have responded on average and try to overcompensate those who are very good, right? Again, the idea is to have sort of a competition for who's providing the best service possible. Token holders can also delegate their stake to those operators. So in that sense, that protocol is closer to like a delegated proof of stake protocol, where you have like a fixed number of validators and then as many people as you want can delegate on them.
What's the jurisdictional and geographical distribution of those entities? Because
that's a good point. Yeah, pretty balanced. So the Genesis operators are based in Asia, Europe, and US.
Okay, but there's not 9 there's not a threshold of 9 in any one geographic area or jurisdiction.
No, definitely not. I'm just trying to think about it. No, there is not. No, there isn't, just simply because we have at least 4 in both Asia and in the US. We do have quite a few operators in Europe, but even within Europe, they're not within the same country. So I guess it depends. If you consider Europe to be one geography, is a validator in Switzerland the same as a validator in France? I would argue probably not. But if you just take, I would say, region, it's pretty balanced, actually.
Okay, cool, fantastic. Then tell us more about the governance that decides on the slashing policy. So say my data center goes down, who do I appeal to for mercy?
Well, technically, if nobody files something against you, you don't have anything to do. You only get slashed if someone actively proposes to slash you.
Okay.
So we do it the other way around, right? Like we assume that you're honest, in the sense that if you've been offline for an hour, that you have a good reason to have been offline for an hour. But if someone doesn't believe that, because let's say you've been offline 3 times this month, which is unacceptable, because we expect people to offer 99.9% uptime. Then someone can say, hey, you've been offline way more than you're supposed to, and then it's on you to prove that this wasn't your fault. Again, think about it how you would do it in the real world, outside of blockchain, right? In cloud, for example. If you're working with another company as a partner and they fail to abide by whatever agreement you guys had together, you're not immediately punishing them. The first thing you would do is tell them, hey, what's up? Right? Can you explain to me why this happened? And then most likely there's a good reason for that. I think one thing that's important to remember is Ethereum itself can only rely on proof of stake on chain because the validators are anonymous. You have no idea who's participating in the protocol. In the case of Zama, every single node is publicly known. So you know which company, which entity is running which of the nodes, right? So everybody's completely doxed. And that's why you're able to bring in reputation and off-chain stake as part of the economic security. And I think this completely changes the way that you think about proof of stake and slashing, because you're no longer just dealing with some random person on the internet. You're dealing with a multi-billion-dollar entity that has way more to lose than the protocol.
Totally granted. And then once I make a proposal to kind of slash someone else, is it just token holder voting,
yeah.
Or how do you decide?
Yeah, token holder voting, basically.
Okay.
With a threshold, obviously, you need at least some participation. You don't want someone to propose to slash someone during Christmas and nobody's participating because they're off with their families or something, right? Usual governance related stuff. But again, we keep governance for critical parts of the protocol. So operator slashing, changing the reward emission rates, things that materially change the security of the protocol.
Okay. Tell us about the throughput that Zama currently supports.
Mm-hmm. It depends on the application. Again, for something like confidential payments, where the payments are pretty independent of each other, usually, we can scale as much as we want. So I'm pretty confident that by summer next year, 2026, we'll be able to do thousands of confidential transfers per second across multiple different chains. Right now, we're going to launch an Ethereum mainnet first. So the first chain we're targeting is ETH mainnet. ETH mainnet has limited capacity. Zama protocol can already support more transactions than Ethereum itself can support. So the bottleneck is not FHE. The bottleneck is blockchain. And I think that this is going to be true for virtually every common use case. The only thing FHE is not capable of doing, and by the way, is not designed to do, are things like high-frequency perpetual trading. By the way, there is no cryptography that would give you sub-millisecond order book matching, MPC, FHE, ZK. This is just not how the technology works, right? I think for that, you need to use something else. Where we see FHE really playing a strong part is anytime you want to do payments, anytime you want to do swaps, lending. So I would say not high frequency trading type of applications. But importantly, I think that FHE is going to be used for long-term storage of confidential assets. Because if you look at the landscape of various confidential computing technologies, you've got ZK, T's, MPC, FHE, basically, right? FHE is the only one that actually currently offers the highest level of security long-term. So if you want something that is post-quantum, that is extremely secure, FHE is really the only thing you can use right now.
So FHE had a reputation for being slow, right? Where does that come from?
It was slow a long time ago. I think, most people have not really used FHE in practice yet. So that's why they still have this impression. But as I mentioned, we can already go faster than Ethereum. Okay, so granted, Ethereum is not the fastest chain, right? And I think, before Zama can support 10,000 or 100,000 TPS, we still have a bit of work. But we're going to get there. FHE increases exponentially performance-wise. And that's mainly due to a combination of better cryptography, so new techniques that we invent, which is good software, engineers doing good job implementing cryptography, and hardware acceleration. So moving from CPU to GPU to FPGAs to ASIC, basically that gives you a 10x every time. So the difference between a CPU and an ASIC is roughly 1,000x cost performance ratio. So I'll just give you one number. We've done some estimates of what we could get on a single server using ASICs for FHE, right? So just one box, not multi-server, just one box you put in a data center. We could currently get to 80,000 confidential token transfers per second on a single box with an ASIC. So you could run like, Visa 3 times on a single server in FHE if you're using ASICs.
Okay, so kind of currently we're using CPUs, and then kind of like you get a factor of 10 for going to GPUs, and then another factor of 10 for FPGAs, right? So and then kind
another
of,
10 for ASIC.
Okay, and then what's the timeline for this, and what are kind of the bottlenecks that you're introducing?
No real bottlenecks. I mean, hardware is hard. It's in the name,
Yeah.
right? So I think, you need quite a bit of time. So moving from CPU to GPU, we've already done that. So the TF-HERS library that we use as the backend for the Zama protocol works on both GPU and CPU. We're starting with CPU on Ethereum mainnet just because we don't need more than that. We're moving to GPU Q1 26 once we start supporting other chains than Ethereum mainnet, so Base, BNB, all of these things that require more performance. And then we're going to move to FPGA. So we recently open sourced what we call the homomorphic processing unit, which is a completely open source FPGA accelerator for Zama's FHE technology. So that's going to be the, I would say, blueprint for Zama's ASIC, which is going to take us probably 2 to 3 years to build. And quite a lot of money, right? Because the ASIC we have in mind is a chip as big as a GPU, effectively. So that's very difficult to build. Most likely, we're gonna probably have multiple failures in the process. So I estimate that is going to be 2 to 3 years of work and $50 to $100 million. It's not impossible. It's just like nobody has done it. So we're the first one to attempt that.
Maybe let's dig a little deeper here. So kind of, I think most listeners are familiar with CPUs and GPUs, but tell us about how field programmable gate arrays, so FPGAs, and ASICs kind of how they evolve from that, or kind of how they behave different than a normal GPU.
Right. So CPUs and GPUs are programmed like software. Okay, so you write C code and then that runs. The GPU runs that in parallel. Think of like matrix operations that can be done massively parallel. CPU is more, I guess, like branching logic type of operations. An FPGA doesn't run software. An FPGA, think of it as an array of gates, very crudely speaking, and you're programming the gates, as in you're doing literally low-level electronics, saying this is an AND, this is an OR, and I'm going to connect them together with a wire. So it's almost like you're doing raw electronics, but instead of actually, printing the circuit on a chip, you're using an array of gates to do that. So it's similar to how you would build an ASIC, but you don't actually have to build the ASIC because you have a programmable hardware in a way, right? So FPGA usually is good as a stepping stone towards an ASIC. So you build your FPGA accelerator and then you try to build it in a way that moving to ASIC will allow you to scale the performance that the FPGA offers you. So an FPGA typically runs in, a few hundreds of megahertz. Moving to ASIC could be, 1-2 gigahertz. An FPGA typically has a limited size, because there's like a physical limit to how many stuff you can put on it. With an ASIC, you could go much bigger and build a huge chip if you wanted to. So the way that we look at things, we look at FPGA as a stepping stone towards ASIC, a blueprint, if you want.
Okay, this is a huge investment, right? And you just said that kind of like the idea for how to build this FPGA, you open sourced that?
Yeah. I mean, everything we do at Zama, 100% of everything we put in production, the code is open source. And the reason for this is we don't want people to trust us on what's running. We want them to be able to verify what's running. And I think, That's one of the things people don't talk enough about in blockchain. People talk a lot about consensus. They talk a lot about, economic security. For me, I think the most important part of a blockchain is public verifiability. If you cannot verify yourself what has been done, then it's no better than running a Web2 cloud service effectively.
Totally granted. I was getting at the economic viability of this. So kind of when you say it's open source, I mean, I can view it and I can review it, but can I also repurpose it? So can I use? Does it have a permissive license?
For non-commercial use.
For
If you want to use
non-commercial.
it commercially, you need to get a license from
Sure.
Zama, or you need to use the Zama Protocol or any kind of Zama services, right? So the reason we open source it is not to make it free, right? We're a commercial company, we're not a nonprofit. The reason we open source it is so that people can see what's running and not have to trust us when we tell them that this is secure.
Cool. We touched on this a little bit. Tell us about the Zama token and what it does. So you already said that kind of like the entities that are involved in the MPC the protocol kind of need to stake them. But give us a bit more context here.
Right. So there are two types of operators in the Zama protocol. You have FHE operators that run the FHE computation, and you have MPC operators that do the threshold decryption. So both of them need to be rewarded in some way. So the way that we do that is that they have to stake Zama tokens, and they then receive Zama tokens as a reward. Those Zama tokens they get as a reward are based on an emission rate. So we basically mint Zama tokens to distribute to them pro rata of their stake, pro rata of the performance, pro rata of the kind of work they did, and so on and so forth. So very vanilla kind of emission reward type of mechanism. So that's the one first utility of the token. It's just literally just people participating getting rewarded. The second utility is paying fees on the user side. So every time I want to encrypt or decrypt data in the Zama protocol, I need to pay some Zama tokens. So those Zama tokens are burnt. So this is like a burn and mint kind of model here. So we burn 100% of the protocol fees, and then we mint the rewards for the operators. So the way that we charge for the Zama protocol is based on volume. So the more someone encrypts and decrypts, the cheaper the fees actually get for that person. Kind of like you would expect it in a Web2 SaaS product in a way, right? Like the more you use it, the cheaper it gets. We're using the same kind of logic here for effectively the on-chain fees. So it's payment of the protocol fees, it's rewarding the operators, and the third is voting on governance proposals. So slashing operators, changing the emission rates, and other things which would be material to the protocol.
I mean, don't hope this happens, but kind of say Zama for some reason kind of goes downhill, right? There's a lot kind of hanging on these tokens and the token governance. So as someone kind of like who's used a Zama-based application on, say, Ethereum mainnet, what's the worst that can happen to me after the fact if kind of say Zama market cap goes way down and someone buys up 50% of the Zama tokens to kind of do weird governance stuff, or kind of, I mean, how exposed am I after the fact?
That's a good question. I think this is a generic question about governance attacks on protocols in blockchain, right? I mean, there is nothing really that we're doing on the Zama side that's different. If anything, actually, governance has less of a potential impact than in many protocols where governance could literally drain the treasury of the DAO or something like that. In the case of Zama, you cannot vote to drain the treasury simply because the treasury is just not something that governance manages in our protocol. So what you could do is you could slash operators effectively, right? So you could say, hey, I want to slash this person, I'm going to slash everyone. So it's more of a denial of service attack that could happen more than it would be like an active draining attack. So there is no financial gain for you to do that unless you're like a Zama competitor who just wants to take down the Zama protocol.
But could I decrypt things after the fact?
No, you couldn't. You wouldn't be able to, because even if you slash all operators, someone would need to basically vote to get those operators back in, right? So as I mentioned, in order to be an operator, you have to go through like a proving process. You have to prove that you're able to run the protocol and that you've been that you're capable of doing it, right? So for you to do an attack like that, first of all, you will need to have introduced publicly enough operators to control the protocol, right? So like somehow you will need to have promoted at least 9 operators that are trustworthy without the community basically saying, oh, this is an attack. And then you have to vote without people being like, this is an attack. Don't forget, people can always fork if they want to, right? Like if the whole community says this is completely wrong, technically, they could also decide to just take the protocol and then move to like a different set of operators. This would be the worst case scenario.
Yeah, but going forward, right? But kind of like backward looking. So kind of like if I have confidential things that are already committed to blockchain, kind of like they hang on the identities of the 13 entities that were the operators at the time. So kind of like if I manage to kind of replace 9 of them by cronies, by kind of, and I mean, attacks could be fairly cheap if kind of like the market cap tax, right? So if I manage to kind of subvert the thing, it's the security is also compromised backwards looking, not just forward looking, right?
Yeah, but I mean, think about it logically though, right? If the market cap is so low that you can just buy up, 51% of the supply or whatever, right? Then it means by definition that there is no activity on the Zama protocol. Like there would be no meaningful amount of money in the protocol at such a low market cap. Like I don't think we've ever seen a protocol with billions in TVL that has a 10 million market cap. So I think there is a bit of like if the protocol is successful and worth attacking, then it's going to be very expensive. And the operators are probably not going to, want to give their stake to some crony. If the protocol is cheap to attack, it's probably useless anyway.
Yeah, no, so kind of maybe I'm misunderstanding here, but kind of because the attack can also look backwards. So kind of the current TVL is not a good indicator of how much really is at stake, right? Because I can also kind of make an attack on value that's already been processed in the past that's no longer kind of in your TVL measurements.
Well, the way that we measure TVL in the Zama protocol is how much money is in confidential tokens.
Okay.
Right? So that, it's not TVL in the sense of DeFi. It's not like swapping or something like that. It's TVL in the sense that you have, let's say, a stable coin, and then you have a confidential stable coin. How much is in confidential stable coins? The second thing also to remember is operators have a lot of stake in the protocol, right? So their incentive is not to get kicked out. If operators are not making any money, they're not going to be running the Zama protocol, and the Zama protocol is going to shut down. Like at some point, the whole economic thing is such that either it's economically viable and the operators are going to basically prevent governance attacks just by virtue of having a lot of stake that it could use against it, or the protocol is not worth anything and there's no operators who are going to be running it. Because the cost for an operator is pretty high. We're talking, 50 to 100K a year for an MPC node minimum. For an FHE node is more than that even. Like, so you wouldn't really invest this much in infrastructure unless, there was profitability in the protocol. And even then, you can only slash operators in your governance proposals. It doesn't mean that you can replace them with whoever you want.
Yeah. Okay, maybe let's move on just a little bit. So you're currently live on testnet, right? So who's building on that public testnet at this point?
A bunch of people. Zama itself actually has multiple, I would say, apps that we're building internally. Kind of like, when you buy an iPhone, it comes with Apple apps, right? Apple has a calendar app. Apple has like a browser. And then you can replace and use other apps if you want to, but the iPhone doesn't come empty. Same thing here. When the Zama protocol goes to mainnet, it's not going to come empty. It's going to come with a suite of Zama apps. So for example, we have an app that allows you to run token auctions on chain. We have an app that we're working on that enables you to do confidential token distribution. But if we look at external people building things, there is a company who's building a self-custodial bank on chain using confidential stablecoins as the assets in your bank account. There's another company who's currently building a confidential stablecoin where the on-chain balances amounts, but also the mint and burn, so the on-ramp and off-ramp to the stablecoin is confidential. So it allows you, for example, as a company to use a stablecoin just like you would use like any kind of currency without disclosing anything to everyone. Most of the applications are payments or finance related, clearly. Because to be honest, I think this is where we see most traction and most need for confidentiality right now.
Yeah, with the current ecosystem, that's for sure. I know you've also talked about private voting and things like sealed bid auctions before. When do you see these coming to fruition?
Whenever someone wants to build it and thinks that this is relevant, I guess. I think sealed bid auctions we're going to do for sure, because I think this is a cool use case. Confidential governance voting. So we are not a governance, like we don't build governance apps, right? Like this is a whole company, you need there are literally companies doing just that. So the goal for us would be to convince them to integrate confidentiality into their governance systems. It's going to happen. Like, I think when people realize that the cost of doing things confidentially is not that much higher than non-confidentially, and that performances is not a bottleneck, there's really no reason not to do things with confidentiality. Think of like how the internet evolved, right? HTTPS in the beginning was expensive to do encryption. It was difficult to set up, so nobody used it. I think it was 13% or 14% of internet traffic was encrypted with HTTPS when Snowden revealed, the whole thing. Today, it's over 95% because it became so cheap and so easy to do that people just do it by default. I think the same thing is going to happen to blockchain. We're going to get to a point where the vast majority of blockchain transactions are going to be encrypted, because why not? Like, you have to remember that the reason why data on chain is public is not a feature. It was needed for public verifiability. But if you now have a way to compute on encrypted data in a publicly verifiable manner, that's what FHE does, then you could actually have public verifiability without having the data publicly disclosed to everyone either. And I think this is a very, very important thing that just wasn't possible at the time when Ethereum launched.
Yeah, I 100% agree that the transparency is not a feature for most applications. You recently closed a pretty big Series B round, so you raised 57 millions. How does this change your trajectory, or does it kind of make a lot of the things that we already talked about initially possible? So things like doing multi-year research for building an ASIC and so on. So where do you plan to spend that money?
Exactly what you said, multi-year research projects. So Zama has consistently been keeping a multi-year runway. I'm very paranoid. Like, I've been in crypto since 2013. I know how quickly things can change. And typically, like, a bear market will last 2 to 3 years, right? So I always want to make sure that my company has enough cash so that we don't have to worry about any kind of short or medium term market conditions. Our goal is that in 4 years, the majority of blockchain transactions are encrypted using Zama's technology. Through the Zama Protocol.
How much percent? What percentage?
The majority, I would
say. So
okay. Even 10%, I'd be happy as a starting point, but let's say, the majority. Whether it's through Zama's protocol or through one of our partners who are licensing our technology, I'm happy in both cases, obviously. And so to do that, we need to be able to guarantee that we're going to continue pushing on research, on development, on performance improvements, on security, on all of these things. And so this funding really goes towards that. So even if Zama makes no revenue, which is not the case, even if our token goes to zero and we make zero out of the token itself, right? So imagine like everything stops. There is a global war. Nobody cares about privacy and blockchain anymore. The whole world stops, right? We would still have enough cash to get to 2029 and above. So we don't have to worry about any kind of world condition right now. And that's really, really important, because if you're going to be betting the future of, your application on some third-party technology, you want to make sure they're going to stick around for a while.
How worried are you about regulatory capture? So, I mean, I know kind of like in this space, we're all for privacy, but kind of from the regulatory side, kind of transparency has been pushed more and more, and kind of won't regulators kind of balk at financial apps that are inherently private and cannot be forced into disclosure?
I think when you think about compliance, this is actually one thing I think the Zama protocol is very strong at, is the Zama protocol doesn't force you to do anything specific, right? What it does is it gives you tools to build confidentiality into your application and define whatever rules you want for how you deal with this confidentiality. So for example, let's say you're a token issuer and you want to offer confidentiality for your users. You could, for example, give yourself as the issuer the ability to decrypt the balances of your users. So users would see their balances, the token issuer would see all the balances, but nobody else on chain would see anything. So this would be exactly the same as like an existing traditional bank, where the bank sees the bank accounts of all their users. You see your bank account, but you don't see other people's bank accounts. So you can recreate TradFi compliance models on chain using Zama, because it gives you this expressivity in the access control logic of who can decrypt what. And this is a very important distinction, because again, if you look at ZK imposes that confidentiality, the compliance is on the end user. So every user has to basically provide their own proof that, they're a legitimate user, and so on and so forth. Zama enables the application to deal with compliance on behalf of their users directly, just like any application in finance does today. And so we as a company don't technically offer any privacy feature. Like Zama itself doesn't offer privacy out of the box. It gives you a way to build confidentiality into your application the way you want it to be.
Okay, that's a good answer. So kind of we've talked about kind of like the difficulties that kind of like doing this on blockchain kind of introduces. You said multiple times kind of Zama can do more transactions per second than Ethereum currently can. Is this just kind of the first commercialization step for you guys, or kind of are you looking at FHE kind of like for broader internet use cases beyond blockchain?
We do. I think, the long-term vision for the company is that at some point, the same way we went from encrypting nothing to encrypting data in transit with HTTPS, we will have encryption of data during computation with FHE, something we call HTTPZ, right? So like you'll have a general protocol for any kind of online application, cloud, blockchain, AI, whatever, that guarantees that the data is encrypted end to end. But that's going to take a while, obviously, to do, right? And so we think that blockchain is a great segue towards this long-term vision, because blockchain needs confidentiality. Like most blockchain applications have not been built because of a lack of confidentiality on chain.
Yeah, 100%. Going from past experience, so we last talked 2 years ago. So we talk again in 2027. What do you hope Zama will have achieved by then?
In 2027, so in 2027, our goal is to be running on multiple chains. So to bring confidentiality to every major L1 and L2 so that users can start building things anywhere they want. We want, of course, Zama to have reached multiple percentage points of blockchain transactions encrypted with Zama. I don't know, 5%, 10%, some step until we get to this 50% plus. But importantly, I'm hoping that by 2027, people realize that FHE can do whatever blockchain can do, and that there's no reason not to use it. I think the next couple of years for us is going to be mostly about proving that blockchain with FHE is much better than blockchain without.
Cool. For people who are interested in following you guys or possibly building on the testnet or soon the mainnet, where do we send them?
You can follow us on Twitter, X, Zama_FHE. And then we have all the traditional social channels. You can also reach out to me directly, Rand Hindi, RANDHINDI. My DMs are open. I really like talking to builders in particular. I'm a developer myself initially, and one of my regrets is that when you become CEO, you don't have much time for coding. So I try to keep my nerdy hat on as much as possible by literally talking to people who are building. So if you're building something and want to talk about it, just reach out directly.
Cool. Thank you so much for coming on, Rand.
Thank you for having me again.